So our outlook for the fourth quarter of 2017 and into 2018, and our focus, our theme for this quarterly outlook on geopolitics. And how are we going to link this into currencies? We see a couple of really big themes here. The first of these is de-dollarization. The role of the US dollar as the global reserve currency is slowly shifting away and out of favor and towards perhaps the Chinese yuan as a supplanter of the dollar in global reserve terms. At least beginning to replace it, we see an acceleration of this theme in the quarter. The initial focus has been on the petrodollar and the potential for global trade and especially oil to be transacted in yuan, thereby supplanting the dollar and seeing reserve managers not focus so much on building dollar reserves. This is a phenomenon we've already seen as Asian reserve managers are not building reserves to the degree they have before, even winding those reserves down. And with the weaker oil price, we're seeing dollar reserves at the big petro economies winding down as well. At the same time, the U.S. still runs these twin deficits and needs to have those deficits financed, and these deficits will grow under a regime of Fed quantitative tightening. The dollar will drop as there will be fewer buyers on the margin for U.S. Treasuries. That's one theme. We have de-dollarization linked to geopolitics, linked to China's desire to see its capital markets deepened and its big transition away from an investment-intensive and an infrastructure building economy to one that's more consumption oriented. Our second theme is one of the so-called fiscal impulse. I think we've seen over the last several years the general agreement that monetary policy acting alone does not work, and therefore if we need to see economies getting stimulated from the demand side, that will require a fiscal impulse. And we have a couple of geopolitical developments here that are going to encourage fiscal expansion. The first, the confrontation over North Korea and what that means for Japanese politics. We've just seen before the quarter starts that Japan is headed for an election in late October, a snap election called partly as popularity of Abe has risen in his response to the North Korean crisis. We see this leading to a massively expanded budget in the future for defense expenditures, but there are also social programs in Japan, especially those aimed at child care and increasing people's willingness at the margin to have children. So we're seeing a fiscal expansion and the market expecting that out into the future, and we'll see, we think this could finally bring some of the inflation that Japan has been looking for, and the yen could be a little bit stronger as investment becomes domestic bound rather than recycled abroad for yield. So looking for the Japanese yen perhaps to turn the quarter, at least going into 2018. The other major fiscal impulse potential, perhaps out of China after the 19th Party Congress, to keep the Chinese economy humming, but especially in Europe after the German election and this need to get Europe into more fiscal integration if the EU project is to survive long term. And again, looking on the defense side of things, the US, Europe, NATO alliance is looking increasingly wobbly with the US President Trump. Europe does, I think, to a degree recognize its need to stand on its own 2 feet in defense terms. It's the perfect issue to bring about mutualized EU debt, as it is the common defense that is needed to be addressed in Europe for geopolitical threats, and as that weakened transatlantic alliance is in discussion. So we're looking for fiscal impulse both in Europe and Japan, possibly on the margin in the US and possibly on the margin in China. This could also help to avert some of the deflationary risks that are ongoing. So over the course of the quarter, we're looking for the dollar. It could be a two-way trade after the very ugly slide for most of 2017. We're looking for the dollar to top out at some point and to continue a longer term decline. The Japanese yen could do surprisingly well. The euro will find its feet again and rally on this fiscal impulse. And I think then the story is very varied across other economies depending on the status of, for example, housing bubbles and the degree of risk to some of the more leveraged economies and emerging markets as well. There are some good stories and some less good stories out there. So I think the themes are very interested and focused on the G3, and then the story is extremely varied across the rest of the major currencies and emerging market currencies.